Hi guys, and welcome back to another episode of this video. I'm going to discuss the concept of money transfer. What is money transfer? Money transfers. To discover money transfers and the ultimate smart money concept, I highly recommend watching the first part of this course as it will give you a better understanding of these concepts. If you are looking for a way to make money, then you need to know about money transfers. In this video, I will discuss the concept of money transfers and how they affect your finances. I will also provide you with the ultimate smart money management concept, which will help you make the most of your money. So if you want to make money, then I highly recommend watching this video. Let's get started. We want to see remittances. Remember, when we made liquidity videos, we said that money moves the market always moves in the direction of money, and in most cases, the market collects money. Liquidity, clear liquidity gaps. Liquidity, or any reason why we always form blocks of orders most of the time, because the order says, for example, the market, where this is equal highs and liquidity is above equal highs, and says that the market should push up and take out this liquidity, so that in order to eliminate this liquidity, the market must move up to actually eliminate liquidity, and then if this is a real buy and sell market, the market will obviously actively engulf candles most of the time to eliminate liquidity. And this is how we form blocks of orders most of the time, collecting liquidity, and you will see an order block table. Now we're going to see how the money moves in the market. You can always use it to see where the money is in the market so that you get entry and stop loss. Now look at this area here. This is the Asian session. In this session, it will build liquidity for the London session. So liquidity Y at the top and bottom builds up, because their person is actually selling and this person is buying. So you have a sell stop here, you have to buy a stop loss here. Note that here is equal low, so liquidity is below this area. So if there isn't same high here, then obviously the money is correct, so the money exists at the same high. So the market actually pushes up and collects this money, clears this liquidity, because remember that liquidity is money. So when we clear this liquidity, you will already see this candle push up to collect liquidity, and then the market plunged sharply and actually engulfed this candle, so money shifted from this equal high to this automatic block is here. If I should go ahead, let's clean up a few things before proceeding. The 1 hour time frame you noticed, which is a week, most of the time you see a week, it's actually an order block, because in order to form the week, you have to have a buy to sell, but on a shorter time frame, it's just the market telling you we have a downtrend, but on an hour-long time frame it happens within that hour, so you'll see the week left to show that the market is actually here. But on shorter time frames, you see a block of orders because you see buy, and then a unit candle, so you always want to see what happened that week on a shorter time frame, like so. We do a 15-minute time frame, which is an hour of buying and selling, which looks like a week. So once you see something that drains liquidity or provides liquidity, you always want to see what's out there so you can identify your point of interest in that area. So yes, the market liquidity is lost, so funds are transferred from the structure here to this order block. Now notice how this order prevents the market from coming back to actually mitigate this sponsor candle and form a new order block here, because we come back to lighten. But I'm not surprised by why this order block, because the perimeter and stop loss are like this, and the week here is actually much longer than this week, and liquidity should be collected here. So I'm going to lower the lower time frame now, like the 5-minute time frame. See if I can find better sponsor candles here and then see what we found. So we found it here. This sponsor candle, so the money collected initially from the high point of the sequel is transferred to the structure here, so the money is here, and then the market moves. So the money basically goes into this momentum candle, because the money that this candle pushes creates this momentum moves and leaves inefficiencies here. So we leave 50% inefficiency here, so the market collects money from this inefficiency. So the money has been in this state of inefficiency all the time beyond that high. The sponsor is not reducing any money here. Then we have this radical scam formation candle, creating this order block. No money is here, right? So note that we don't have candles or anything to collect money from here, so there's nothing coming back to ease this area. There is no relief from this area. Instead, the market is just depressed, so we know the money is still here, so we need to transfer money from here to here. And that's the market, the reason for the recovery, because of the transfer of funds. That's what I identify. The way the money is in the market, so I can get a valid order block and know where to actually enter my entry, because I know where the money is actually there just by looking at the remittance, so you can actually walk the market and actually see where the money is and where it's going. So look again at this note how we collect the money, that the money is transferred to this area, so the money is transferred to this area, so this is a promoter and gets liquidity, then the market goes down, but notice that nothing comes back to collect money from here, no one comes back to collect money from this order block, so the money is still here, and then see what happened. He came back and took that money, so the money is now transferred from here, so the money is now here, and notice that the market grabs liquidity, i.e. the currency, then pushes down, creates another order block, then this alleviates the automatic blocking, then continues to push down. That's how you do it, by looking liquidity. Is the remittance in the market of the market to actually enter the entry, because liquidity are funds move the market to the right. So you can always track liquidity as if you were looking at the transfer of funds, and then the market continues to fall, and once you see areas of liquidity and the market lightens liquidity, you can do this in any time frame. That means that it collects liquidity, the market must mitigate the structure or order block that collects liquidity.